Let us just quickly address what's happened with the Indian Rupee. It's fallen to a record low of almost 85.1625. Let's see what the current rate stacks up. There you go, against the dollar. Now, this is, I think, the sixth consecutive session where we are seeing the rupee, which is coming under pressure. Let's head across to Abhishek Goenka, India Forex and Asset Management, to understand more. Abhishek, a record low with regards to the Indian Rupee. What are the factors impacting it? Because clearly, U.S. bond yields has been one concerning factor. Plus, you have the Fed's hawkish stance coming at bay. How are you looking at it?
Hi, good afternoon. Can you hear me?
Yes, we can hear you, Abhishek.
Yeah. So I think over the last few weeks, I think the scare of tariffs, of increasing inflation in America, and 10-year bond yields, as you rightly mentioned, has been the main concern, because of which all Asian currencies are depreciating against the US dollar. Also, the dollar index is pretty strong, and the currencies like Euro, GBP, Australian dollar, Japanese yen, everything is getting weaker as compared to the US dollar. And for India, I think the Chinese yuan is also a very important currency, which I think the central bank focuses on. And yuan has been broadly weakening, again on the concern that there will be tariffs that will be put on China. And if the Chinese tariffs is put on, then China will have to depreciate its currency. On all these expectations and repercussions of Donald Trump coming in power, I think the world markets are reacting. And we are in a risk-off mode. So whether it be bond yields, whether it be equities, whether it be currencies, everything is reacting to that. I think going forward, what RBI take has been is to keep the currency weak, but slow and calibrated depreciation with low volatility. That's the broad mandate of Reserve Bank of India. I don't think we are going to see that mandate changing. In fact, the delta of the rupee as compared to other Asian currencies is very low. If the other currencies move by 3%, we move by less than 1%. So I think that way, with our reserves being very strong, we are pretty much okay. We are reacting because of the broad dollar strength happening globally. So I think after Jan 20, once he gets onto power, then I think we need to see whether things really pan out the way he's saying, or things don't pan out the way that he's saying, and he might just take a calibrated approach. In that case, everything's going to turn. Everything which is really moved up in terms of dollar strength, everything is going to turn. I think we need to watch these things very carefully. Next week is going to be holiday season. Things are going to be little dull.
Abhishek, I will intervene over here is in terms of the portion we are talking about what the RBI is doing. Initially, the RBI would actually go ahead and intervene in the NDF market just before the onshore markets opened, and this was to ensure a soft opening, which is not an option anymore, right? Now, they have to go back to forwards. So are you seeing a shift in terms of their strategy by the RBI goals? And if so, is it back to the old regime?
So RBI have been very, very innovative in their approaches. We have seen them intervening in currency markets, domestic futures, forwards, buy-sell swaps, ETF markets. They would be using all these tools to intervene in the currency market. They would also call up banks and ask for the trading position. So I don't think RBI is short of tools, and they would always be innovative going forward also, despite the fact that we have a new governor. I have no concern on that particular front. They have already taken a lot of positions in the non-deliverable forward market. As per my number, that was around $50–60 billion. So I think we are seeing rupee at 85.20 only because RBI had a lot of intervention. Otherwise, we would have been at 87 to a dollar. So I think I don't think we are going to go back to the old regime. We are still going to be very, very innovative in our practices of intervention in the dollar rupee market. Is that right? Things have turned against India when we talk about inflation. There was a sell-off in equity markets. which is also adding pressure to the rupee. So I would not extrapolate it a lot. I would say another 30, 40, 50 paisa is pretty much possible in dollar rupee. But then once dollar strength starts subsidizing, again we are back on the sell dollar positions will start getting made in Indian rupee because we still get 2.5% premium, and Indian exporters always make money when they sell dollars upfront 1 year in advance. So that trade will again start happening. Right now importers are a little panicky, exporters are not selling. Once exporters get back to the market and importers take a breather, then again the same trade, rupee gets range bound, and we just start making money on the premium.
So Abhishek, then what is the kind of range that you're looking at in terms of the rupee, say, over the next 3 to 6 months? That's my first question. And where do you see it at the end of the fiscal?
Not bad. So, frankly, with Trump coming on power, it's very difficult to predict the numbers of dollar rupees right now. But we go by a thumb rule that rupee depreciates broadly by 1.5 to 2% now every year on an annualized basis. And I think that number, rupee has already depreciated by around, say, more than 1%, now at 85.20, I would say, 1.5%. So in the next 6 months, my bet would be we will not see it above 86 for sure. And in the next 1 year, maybe I would say closing 2025 December, then that numbers would be close to around 86 to 86.50 max. So I don't think I'm not a believer of say where we are going to see 87, 88.
Okay. And overall, with the range that you're talking about right now, how do you see the reserves getting impacted?
So I think our overall holding in the equity markets for FII has still been very low now. I think we are close to around 14%. We used to be around 20% and higher numbers. So sooner or later, once the bond yields in America start correcting a little bit, things stabilize in America, FIIs would come back. And then I don't think we are going to see reserves dwindling the way we are seeing right now. Okay, so I think maybe there is some more pain till the time equity valuations in India also improve. Maybe another 5-10% in equity market. And that could be seen in the next 2, 3, 4 months max. After that, I think our reserve position will also start improving once the fresh flow of money will start happening in India.
Okay. And very lastly, Abhishek, with regards to the weak rupee, does that limit the chances of a rate cut? And if so, what's the kind of trajectory you're building in?
So, as we see that there is a chance of inflation inching up in India, and we have seen the numbers, and growth is also dwindling. Last couple of quarters have not been very good. Maybe one more quarter we will not see a very good number. So I think one rate cut is definitely in the cards, because somehow we need to propel the growth. Maybe the next policy maybe in February or something we want to see a rate cut. After that, let's see how US behaves, because US rate cut expectations have completely gone off. From 5 they have come to 1. And now with Indian inflation moving up a little bit, I think as of now I'll stick with one rate cut. And then let's see that. So regional chances where they were looking at a lot of rate cuts in India, the 10-year bond yields, which you were expecting that you just take long duration bonds and you won't make a lot of money. I think that expectations have slightly come off. We may not see 10-year going down or drastically down. So I think maybe 1 or maximum 2 rate cuts next year.
Okay. Last question, a quick one, Abhishek. Where are you expecting the 10 bond yield to move from here on? Because I think it just dipped to a 3-year low a couple of weeks ago.
So my expectation is till the time we don't get some great news from America and also some inflation numbers coming from India. A 10-year bond yield would not go below 6.7.
Yes. So 6.7 is what we need to watch out for as well. Thank you, Abhishek, so much for joining us on the show and sharing the views. So that's the view coming in from Abhishek Goenka. Clearly, if you see in terms of the rupee, 86 to 88 per dollar is what he's expecting by December 2025, and he does not expect it to go below that 83. That's the number that we should be tracking as well from here on. So an interesting move coming in with regards to where the rupee goes. But let me head across to Avinash to actually take in a question on